Welcome to WTF Dana Point. Not that WTF, it's the weekly trend forecast. This is a weekly update on the Dana Point real estate market that keeps you in the know and really on top of everything that's happened in the past week, so that you can make decisions based on current and local data that might help us spot trends and anticipate where the market might be headed. Think of it like a crystal ball that wants you to figure out what might happen by telling you what has happened. So I guess it's more like a history book than a crystal ball, but nevertheless, if we haven't met, my name is Nathan Necochea, and I'm a realtor here in Dana Point.
What a great show this could be. Instead, we've got an absolute idiot here running the show.
So we're going to start with the big picture look. The Market Action Index. This gives us a numerical comparison of the rate of home sales against inventory. Think of it like a quick way to answer, how's the market? So as of the end of last week, the MAI for Dana Point sits at 35. That's incrementally higher than our last month average of 34, but either way, Dana Point market is still slightly favoring sellers. It's really just a sign that even with the new inventory picking up, demand is still enough to slow down those gains. Next, I want to dive into the different market segments we have here in Dana Point. As you can see, we kind of run the gamut of price points, which is something that I love about this market. The market is actually broken into 4 segments: the bottom, the lower, the upper, and the top. So our bottom tier has a median price of just under $1.9 million, a lower tier of $3.7 million, and an upper of $7.6 million, and a top tier of almost $23 million. What's important to take a look at within each segment and what potential sellers and buyers should be considering more than the overall numbers is the number of new listings versus the number of absorbed listings. 1 week's numbers don't really tell the tale, but if you follow these over time, it'll give you a more clear picture of what's happening with demand within each segment. So then you're able to anticipate where the market is going for your specific segment. So let's break it down. The bottom tier saw a boost in inventory with 4 new listings at the market while only 1 was absorbed. The lower tier had a push week with 2 new listings, 2 absorbed. The upper and top tiers also pushed with 1 and 1 and 0 and 0 respectively. What I get from this is that declining mortgage rates may be loosening up the lock-in effect for sellers that are in the lower half of the market. Because let's face it, the lower half of the market is always more impacted by rates than the upper half. By nature, those with more expendable income are less affected by inflation, mortgage rates, and a volatile market. Okay, maybe less affected isn't the best way to say that. Let's just say this: the more money you have, the easier it is to dodge, dip, duck, dive, and dodge the negative impacts of the economy. Okay, the last metric I wanted to touch on from last week's data is properties with a price decrease. I like this metric for both buyers and sellers, because for sellers, the metric can give you an idea about the importance of correct pricing. It lets us know how much of our competition within each market segment is overpricing their homes. That's important because it gives a seller comparison points versus similarly priced homes. It lets us really leverage the benefits and features of one home over another. And more importantly, it lets us know how high up the value range a home should be priced. Understanding where you stand against your competition is the best way to know where to focus your marketing. For buyers, this data point is important because it can give us a sense of how ambitious current sellers are. It can help us set like a max price that a buyer might be willing to pay and how reasonable a seller might be in negotiations. Simply put, there's a big difference in market dynamics if a huge percentage of sellers are having to reduce their asking price. At this point, I should say, in a typical, standard, normal milquetoast market, we expect to see 30 to 35% of homes see a price decrease. So yeah, 1 out of 3 sellers usually hit the market at a price that the market just won't support. I mostly chalk that up to owners kind of rolling the dice to test the market and see what the desirability quality of their home is. They're proud of it. Last week, this is where each of Dana Point's segments sat. The top tier saw just over 27% of homes decrease their price, while the upper tier saw almost 40%. The lower tier had 28%, with the bottom tier containing the most ambitious sellers and saw nearly 46% of listings take a decrease. Now, whether that's a result of sellers overestimating demand or just underestimating the level of competition, I'm not really sure right now. Now, I do have one caveat about price decreases. The fact that a listing drops their price isn't exclusively indicative of overpricing. So it's always worth taking a look at a specific home that decreased their price, because other aspects might be contributing factors. At the top of my mind would just be, a lack of exposure. Sellers, if you believe your price is based on current, relevant, and accurate data, then take a look at your exposure. A lot of the time, a home sits because people don't know about it. Never mind the MLS, the generic walkthrough video, Zillow, realtor.com, homes.com, or nathannecochea.com. What else has been done to get your home in front of potential buyers? How has media been leveraged to put your home out there? Remember, YouTube is the second largest search engine. Short and long form video is integral to the discoverability of your home. Even getting a few hundred extra views might be the difference in getting your home sold, and it's sitting on the market for 6 months after a closeout sale. Make sure to hit that subscribe button for more real estate tips, bad jokes, and even maybe a few insights along the way. And hey, let me know in the comments where else in Orange County you would like to see a WTF for, and which market segment is your favorite. Until next time.